I'll give you, that's actually quite funny for you.
The RBA has a didgeridoo. That's why they're more believable.
Well, they actually did bring in yield curve control.
Okay, so let me ask you. I listened to that whole Powell interview.
I didn't listen to it, so I need to hear what happened.
Marcus Brunermeyer was from Princeton and was an economics professor at Princeton. So let's see what the fuck this is. Hold on a second. Yes. Oh, hold on. I got to mute. No, Edward, hold on.
We're going to resume the recording. Go ahead.
Okay, so we know, right? Here we are, the 30 years on the lows right now.
Yeah, it got another few ticks.
The gold rally failed, which was trying to rally off of. I can't tell you. Listening to Powell, it was painful. Because which is it? I know that the 30 years are going, hey, I'm going to sell you because it's my one place I can go. It's my one place I can go with the least amount of friction until the Fed makes a decision. But Powell, again, it's the social justice ministry. It doesn't mean anything to me, okay? It's just a line that defines where they're at and how they're going here. But why do you discuss inflation when they're so committed? How many times did he say it today? People on the margins here, I'm taking my notes. People on the margins need to be brought in and a consideration for maximum employment in that. Here's another one, point A, only one factor will not raise interest just because of Nehru. Okay, he said that. That's a quote. But everybody says so. Look at, you could see now the dollar, which it was weakened dramatically while Powell was speaking. Now it's the 30-year running the entire gamut of the show, right?
Yeah, and the dollar goes bid.
Right.
The silver backed off.
Right.
The regional banks ripped.
Yeah. It's all right in lockstep. It's there. And so, it's like I said, I was having a conversation with Mike Temple because he called me during it. So it was a short conversation. And I said, it's kind of like Archimedes, give me a lever and I will move the world. Well, guess what? The 30-year is the lever for the algorithms.
Yeah, we've been talking about this for 3 weeks now.
It's right there in and why, again, it's why the algorithms to me, they don't adapt. It's all mathematical and you can't fight it. I use this, I treat them like a judo tournament. And I know a little bit about judo from Bobby Berlant and of course the Coen brothers. No, don't laugh, John.
I know how good he is.
That was my neighborhood. They all grew up where I grew up.
Yeah, I mean, I used to work out with Bobby and Corey, make you want to vomit.
Yeah, but Stevie and Irwin, who trained him, they were, Stevie was young, a couple of years younger than me, but Irwin was older. But they were the coaches. They were coaches on the National Olympic judo team. That's how they were really good friends with Ben Nighthorse Campbell, the senator from Colorado. You remember?
Yeah. Oh yeah.
Great guy, by the way, and he was a judo champion. Not an Olympic champion, and he was very big in the judo. But I know how you use somebody's weight against, the whole concept. And that's what you have to do with the algos. Go ahead, go nuts. I don't care. God bless you.
Yeah, trade with them.
And it's I have people calling me going, wow, it's tick for tick. I said, no kidding. But
where they've been for the last 3 weeks.
Yeah, but as Powell taught, and it was painful because somebody's got to stop and ask the question. So if we, and I'll go back to the question I started asking last April and May. If unemployment, well, I thought at the end of the year, if we saw 9% unemployment, I thought it would be outstanding. Of course, we got much less than that. we were down to 6.7. But if we saw 6.7, if we saw 9 and 6% inflation, would the Fed move to raise rates? Now, is the 30-year telling you that they think they will? The short end tells me no. So what's going on in the 30-year is because the algos are driving it. It's the only place that you have to hedge yourself. But, it's like, there's no question, and I got a lot of good feedback from the last blog or 2 blogs ago when I talked about that, the dollar yen was going higher because Japanese investors are, there's no question. And we saw the data, was it early? Yeah, early this week. The Japanese investors were buying US treasuries for the first time, because why? The 30-year, when you look at, if you go to the Bloomberg.com site, they will show you that negative real yields on the 30, and we talked about this the other day, are negative 20 basis points. And that's with a really good auction yesterday, by the way. Negative real yields on the 5-year is about 160 basis points, 1.6%. That's quite a bit of difference. But so they're out there, chasing some of it, for higher, which is why when they go higher, you see the dollar rally. There's definitely foreign investors chasing some of those yields because, again, it's the best of large yields outside, of course, we can argue about China because the real yields in China are far higher. Okay, here we go again. New lows. And it's a free run. So they're going to force the Fed's hand. I can't tell you what the level is, but if either Powell is a consummate liar, okay? Either they're lying about concern about minority employment, or the market is totally misreading this. And in misreading it, the Fed is going to have to act by extending out its duration. What you have to have one or the other. I don't know what the break point is, but it has to take place because mortgage rates are going to go higher, which will slow the construction spending, which has been one of the better drivers of the employment data. Go look at the last jobs number.
Yeah, and the Jan lumbers limit up.
Yeah. So all good things, right?
Oh yeah.
Well, you've got Biden speaking tonight as well, who's going to come out with a big check, and the market's already.
I'm sorry.
We have Biden speaking tonight, who's going to come out with a big check,
Yeah.
and that's
Right.
going to put more pressure on the long end.
Yep. Yes.
And
Well, Andrew, that's why people who, in anticipation, well, the economy is going to boom. And I'm not saying that they're wrong, but when do the jobs come back? I'm not saying that you're wrong, but that's going to put the Fed in a very difficult situation then. I agree.
Well, I think we've spoken about this for I agree, but I think we've spoken about this for some weeks that eventually when they run into, their comparatives in the middle of the year, and I guess the market's going to press them and the stock market's going to keep pressing high and the rotation's already happened. Russell is the star and will continue to be the star, I suspect.
Right.
Banks will love it up until we just run too hot and then they've got a big problem.
Yeah.
But again, as we've said, and this is why the people who love gold permanently are going to have a difficult time for a period. I'm not saying I'm bearish gold, but it's not where I'm spending most of my capital.
No, you're 100% right. And
there's better places for the moment, but my God, gold will be a fantastic opportunity again when they're going to have to come back.
Look at, it's like the question you have to ask yourself in following up your question is, where does the gold silver ratio go now? Because if I look at platinum and I look at copper, gold is, again, if I'm looking for something to sell, I could tie it into the 30-year, even though historically, it's a terrible correlation, but that's okay. That's all we have to work with right now. And that's, again, what the algos are driving. So like last night when they hammered the silver right out of the chute. If you would have put the silver gold on, long silver, you would have had a phenomenal day because the silver finally took itself to the platinum. So you're seeing the industrial metals, right? I'm not going to anything
very
with an. Now listen to me closely because I don't want to come back wrong to me. Anything with an industrial component, whether it's in the Green New Deal, anything tied into solar, okay, that makes sense. So, and I'll use gold again as the fulcrum to sell because it really doesn't have an industrial component, and gold will not get good until the Fed has to finally tell us what they're going to do as far as yield curve control. Does that make sense to everybody?
It's a very astute point. Not that I need to tell you that you're astute, but I mean ultimately it is. And there's the yield curve, and we've already spoken about the fact that we've got some runway here. The market's got runway, so you don't often get this sort of runway, meaning 6 weeks or a quarter, where the things like gold silver ratio and this blow off can go on. While and so where do you want to extend most of your capital to take advantage of that, rather than being outright short gold? That's a fantastic way, and you may just pick up a great trade by gold going down a lot and silver going nowhere, or you might get the pair trade right. Doesn't matter because you're on the right trend. Because I don't think the market's going to break yet. I just think there's enough runway for this to play. They're going to have hiccups here and there due to the fact that everyone knows it's a house of cards, but we'll worry about that trade when it comes. I think it's a very good way of expressing it.
Well, and Andrew, you're sitting in the catbird seat because you look at the euro. I told Judd the other day we were talking about EuroCAD. So anything that's tied to commodities. So look at, we've all been sitting there scratching our head at why the Aussie is so friggin' strong. Well, that fits that scenario too.
Well, all the Euro crosses have been on fire. Euro Aussie, Euro Kiwi, Euro CAD.
Yeah, even the euro yen is under 126, and a half, which why? But I get it because that's a better statement right now. The euro has some issues in the short duration here, until they, if you've watched the European sovereign debts, the futures, you've seen that, what's going on in Italy with Matteo Renzi trying to game it and trying to, elevate himself yet again. There's a lot of stuff going on here. So we shall see what happens. But I am amazed because when I listen to Powell talk, and I did, when I listen to Powell talk, I go, you can't have it all ways. That's my point. You can't have it always. You can't tell me that you're so concerned about minority unemployment and then have the market think that interest rates are going up. But I know that they're really not thinking the interest rates are going up because if you look at the short end, there's no movement. In fact, we may wind up with negative T-bill rates, but you are looking at the long end where they're putting on their hedges against the whole game, right?
Look, the rates can never go up because if there's one central banker in the world that learned his lesson when he was on his P plates, it was Jay Powell in 2018.
Yeah.
When he learned from the Q. Sorry?
He talked about taper tantrum and he said, well, we won't have it because we will basically send out word well beforehand and we won't move right away. We will just announce, so they're trying to, as we would say, split the baby so that he doesn't wind up, number one, having to do a Powell pivot, or number two, with a Bernanke taper tantrum and walking it back right away. Because again, what is that about? That is about Fed credibility, right?
Yeah.
That is about Fed credibility, and he's very aware of it. So I don't know how you do this. I don't know how you do this. He is trying to walk a tightrope here. I'm back in Leon Russell. I'm up on a tight wire. One side's hope and the other's fire. It's a circus game for you and me, or one side's ice and the other. So I'd listen to it. Okay, go hammer the 30-year. And let's see, I'm just looking for the correlations. I'm not fighting this market whatsoever. Yesterday, I had a really good day anticipating that 30-year auction would be good. So I caught a flattening of the curve, took the money. I became not an investor, but a trader. I haven't gone back to it today because I know in front of this Biden speech that the 30-year was going to struggle a little bit. I should have just been selling 30 years because now the stimulus is up to 2 trillion. So the way to play it is they're basically putting it out in the SPOO bond for us, right?
You got no RH half-day in the SPOO bonds right now.
Yeah.
And it's just gone to its first oscillator resistance at 226 2664.
And it makes perfect sense. That is to me perfectly logical. If there's one place that's logical today, that is absolutely logical.
Yeah. I mean, he's going to have to, he'll end up at yield curve control.
I'm sorry?
He'll end up at yield curve control or a version of it.
I don't see how you get out of it because the market is pushing their hand. And one thing, as I say, we've learned about central banks, they don't want markets to work. Can we agree on that?
Yeah.
Well, yeah, they broke it.
No, they broke it. And now that they own it, if they let the market work, it's going to push them into a place they don't want to go. And I listened to Powell. They don't want to go there. He does not want to be forced into a situation where he has to raise interest rates prematurely.
Yeah, which is consistent with the blow off in these markets, which is what we're seeing. And you got to be in the right sectors, consistent with. And that's why all the Robin Hooders are going. Why is the Nasdaq not going up now?
Yeah, right.
But they don't get the rotation, Andrew.
Exactly. They don't get. As I said last week, if you don't know how to make it, you don't know how to keep it.
Yeah.
Nice.
I mean, the rotation is incredible every day. You have huge opportunities. Huge. Yeah.
Look, it all ends. Look, it all ends in trouble. But I mean, the hold in Bitcoin this week was another tell. And that thing's going to, I'm not sure if you read Lagarde's article overnight, but she was out there.
Yeah, I did.
Yeah. So that's the second shot across the bow. That's coming down the pipe. You get Biden's speech tonight. He's not going to disappoint. That gold silver trade could be the one that just really keeps you.
I'm looking at it right now, Andrew, and I just put it in an order in the silver. I'll tell you right now, down at 25.39.
Do you have a chart of that, Judd?
Yeah, I had it up a minute ago.
Oh, sorry, I wasn't watching.
Here's the silver itself.
Yeah.
And let's just put up the gold silver. There's gold silver right there. There's the daily. And you can see how it's down into these averages down in here.
Yeah. Right.
I'm just doing it based on my own correlation. I don't need an algo. I could see what they're doing. Platinum had a stupendous day today. Copper had a wonderful day. So they're buying the commodity rather than just monetary effect of it. Because they go,
all the commodity currencies, they're buying the underlying commodities. They're buying the Russell and they're selling everything else.
Yep, that's right. And you see it in the commodity, right? The commodity currencies put the cherry on the top.
Yeah.
Right.
Yeah, we went through that chart on the Aussie last week. seemingly has a destiny with 81 to 84, which we're talking about again, talking to that run. There is runway here. I mean,
Eurowazi wants to get on a 150.
yeah. I mean, you rarely get these opportunities in markets where, I mean, don't worry, we'll get back into a period this year where we won't have a fucking clue. And so you better fucking make some money now, because it's going to come. And certainly there appears to be runway, and they're giving it to you. The challenge is how much leverage you want to put into the book and where you want to go with it. And obviously, when you every Monday, in the last 2 Mondays, it scared you a bit. That's when you're meant to have turned up.
Right. So Andrew, this is what we see, and we see it. You know, I'm not locking up, but I don't lock up with markets. I don't exist in this business because I lock up with markets. Oops.
You know, this 71 in gold silver is going to be monster.
Right.
Yeah, and it's been a big area. It has been a very big area. We know it. No surprise there. Yeah. Fucking, excuse my language. Even Fleur is up to $21. I'm gagging.
Well, what's unbelievable is Freeport. I was doing some of the swings on some of the work on that earlier.
Yeah, I've rolled down to other. You know what? I really and I can't even get my Glencore add-on, but you know what? I am very happy with the.
Yeah. Well, so Freeport just went to its the first logical target, which is that low right there, which is 32.35 from the April 14 breakdown. So it's just completed a 7-year retest.
See, and the commodities are telling you that the Fed is behind the curve, right? They're telling you, because they're not worried about a rate rise. They're looking at the 30-year and they're spitting on it going, hey, if you're indicating a very robust economy, while the short end is telling us that the Fed is not going to move, right? Here, as good as the 30-year is, let's look at, here, I'll put up the 2022 euro dollar chart, okay?
All right, so that's what? That's EDZ 22, right?
Yeah, I'm putting up the Ds. It's 99.71. That's 29 basis points.
Well, the S&P bond spread told us that a month ago by taking out those highs.
Yeah, well, and holding it the first day of the year.
Yeah.
The first day of the year, SPU bonds held the 2018.
Right.
Most
Yeah,
important technical trading day of the year is the first day of the year. I mean, it's just
2116, 2118, that area, it was huge. I know you were all over it.
Yeah, I mean, and look, with the policies in front of us, with a chart pattern like that, I mean, the objectives on that thing are still 10 to 15% higher without the full objective. I don't think we've even met the. I think we've met the minimum. Like, but it's got much further to go. I mean, I was showing the DAX chart last on Monday. I think that thing's took out new highs this week.
Look at the Nikkei running.
Oh, the Nikkei's going to 30. The Nikkei will print 30K.
Oh, there's no question.
For a start.
Yeah.
But again, we've spoken about this for a month or so. If this party is in the last, at the end, it's not going to end quietly. It's going to storm. It's going to blow off. Always does. I mean, I think they made the comparison from the March low of 99 to the March high of 2000. The market rallied 120%. We haven't even done that in NASDAQ yet.
Yeah, like right now, they're selling the credit card issuers. Visa and MasterCard are getting bombed. And they've been selling that all day long against PayPal and Square.
Yeah. But the question is always, do you turn up on the sell-off days to back your conviction of this, or do you chase it days like today. And you gotta, that's how you make your money trading, because you gotta turn up.
And you know, the interesting thing is, and that's probably what's putting some pressure on the 30-year. The auction yesterday was so good that there's a lot of people who own this. Are they now putting some hedges on? You know, don't forget. Let's remember always the Fed doesn't hedge, so we don't get that's $7.5 billion out of the picture. But are these people who stepped up to buy the 30-year and it was bought and it was a very positive auction? They can't step in here, and so this I have to believe is just truly the algos just pushing it, and there's a lot of traders are going, hey, why not? The Fed, until the Fed announces some type of yield curve control, it's a free run. It's a free run.
Yeah.
Somebody had a chart out this morning showing the duration of the Fed's. Oh, I know. Wait, hold on. This is really important. So glad I came back to it. Let's see something.
Andrew, write down that number I sent you.
Which number?
I dropped something in the chat for Andrew.
Okay. All right, hold on 1 second. I am going to find, I know where it was. I know. It was a Bloomberg article. Go find it, Bloomberg.com by Rich Miller. Rubin says Treasury should substantially boost maturity of debt.
I missed that.
Oh, don't miss this. Too good.
Say that again, sorry.
I got to do your work now for you freaking too. Okay.
Sorry.
That's okay. It's by Rich Miller. And it says ex-Treasury Bob Rubin, of course, in a paper that was written for the Peterson Institute, talking that they need to move out the duration of the Treasury's balance sheet, of the Treasury's borrowing. Okay, this is not the Fed, but that would, of course, force the Fed to start buying further out, because if the Treasury was going to issue more paper, right now the Fed is so active on the short end because that's, the Treasury, this article, did they change this article on me? Because this is not as comprehensive as what I read this far. Let's see, hold on. Let me see, get you. Oh, the average maturity of outstanding marketable government debt, okay? How many months? What's the average duration of the Treasury's debt?
2 years, you think?
No, it's longer. I don't agree with this number, but this one says 70 months, which would be about what, almost 6 years.
Yeah.
So that's the average. So they want them to really elevate it. So this is the paper you should get. It's from the Peterson Institute. It's by Rubin. Let's see. They changed this article. Oh, it's written by Rubin, Joseph Stiglitz, and Peter Orszag. Peter Orszag is probably the best person who's ever worked at the Office of Budget Management. It's really good. Really, really good. So they wrote the paper, and it flies in the face. And let's see if they talk about it in here. Because the Treasury TBAC, Treasury Borrowing Advisory Committee, which is made up of Wall Street hedge funds, banks, and who advise the Treasury, they've had them doing most of the borrowing out to about 2.5 years.
Right.
Okay, so there's a real, which I've maintained. I've been arguing that conflict for a friggin' long time. To no avail, because nobody gives a shit what Ira has to say. But I think that committee, that's as bad as the G30 committee, by the way. But that's worth a read. That's not, the article was far longer when I read it. What did they do here? I know where to find it. Hold up. Let me see what I originally posted. May have changed. But I still am saddled with the question. It's a very big question for me. Is the market, is the algos and the way they're trading pushing the Fed to have to embark upon yield curve control? Now, selfishly as a trader, I want that to happen because that will unleash my big macro view, and I think then you'll see gold take center stage again. To me, that's what the gold market is waiting for, by the way.
I would contest that they tend to fuck things up, not get it right. So I would contest that they're going to be late, or they're comfortable to let it run hot, and the whole thing fucking breaks. But so I think that the risk is, sadly for the gold people, and I'm one of them, but I'm sort of hedged out of my miners.
Yeah,
is that we may see this, what the Fed would consider, and their brilliant academic PhD advisors will put us in this mess.
yeah.
They'll run hot. The market goes and gives us the objectives in the S&P at 4,200. The market doesn't lose control yet of the long end.
Yeah.
Gold does press lower, and that silver gold ratio does what it should do under those conditions, and then the market gets completely smashed. But that would be like, that, as we spoke about, is third, fourth quarter this year when we run up against the comps of the liquidity. So I think then they'll have to come on with some sort of next measures. I don't think this ends orderly at all because they've just got themselves in such a mess.
Yeah. No, Andrew, I agree. I just don't know how they're going to play this. If they let the markets work, they have a serious problem, right? Because
they do. But I mean, again, it's why I keep coming back to that point that if you don't know how to make it, you don't know how to keep it, because there's going to be people after last year thinking the Fed will always fix it, ever,
right.
forever.
Oh, yeah.
And that's not the truth. There's plenty of times in history that will tell you that. So I can only continue to implore people that you must run stocks, you must respect the board, because at some point it's going to change on everyone.
Well,
now, those first two dips the Robin Hooders will buy, and then they'll be back driving cabs.
Yeah, well, a lot of these guys are going to be back driving cabs.
Not at the moment, because they're all legends, but and Bitcoin will be one of those casualties too. We have no illusion. I mean, I think it will. I mean, I'm not going to get in a debate whether it's the new brave world, but it's all too easy at the moment, and there's too much disciple talking around, etc.
Although I have to tell you, I'm amazed at how Bitcoin held up to, even last night, because Lagarde came out in her speech, in her talk yesterday, and then Q&A, she was warning, that she said there's been some very bad things funded by, she said it.
But to your point, the fact that the market is doing what it's doing means that the market's going, I don't care what you say, until you do something, we're taking it higher.
Yeah.
That's the same with the bond market, and the same with the stock market.
Hey, if there's no resistance, Andrew, why would you stop?
Well, because that's the great, beautiful thing about markets. People are greedy.
Yeah, thank God.
They'll run it.
Yeah, they will push and push and push. And the algos who really, there's nothing with nuance or context. It's just numbers. And if I'm programmed to that, and that's my lever to move the world, the 30-year yield, I'm moving it.
Yeah.
Why would I stop now?
Yep. But they'll move it in such a way for a period, I think, that will line up with some of these objectives that, the market seemingly owes us on the S&P bond spread, even the DAX, even the S&P Russell. And then, we're not too far away from crumbs for the pigeons, I think, in terms of actually where the markets come from. And,
Well-
you know, I think second quarter this year, I'm not, if the market's up 10% from here, they can have the next 10.
I mean, tell you what, Chris Whalen wrote a great piece today. I can't send it out because you can go find it because I know it's a great piece because he discussed it. Why do I say it's great? Because he makes all the cases that we've talked about. We've talked about. And he thinks that, you know, look at the most powerful move that has taken place is in bank stocks, totally off the steepening of the curve.
Yeah.
Right?
I mean,
Yeah, but again, that was a trade, and I had mates of mine last year who go, oh, banks should go up. So why are you fucking killing yourself? They'll go up when the curve steepens.
Exactly.
Sorry, Judd. Apologize.
well, now it's going. I mean, you know, you get another $50 in Goldman if this keeps.
This is a lockstep.
Yeah, it's the same trade.
Right.
Every day. It's the Russell, Goldman, KRE, KIE, regionals. They all do.
Regionals, right. They're just, look at, you know, one of my favorites, Synovius. It's up to $39 and it's totally, there's nothing else going on yet except that the yield curve is steepened.
It's a beautiful example why people lose, you know, trading and having a process and understanding the board is very different to coming up with a theory like milkshake, for God's sake, because, you know, the dollar strengthens shortage sort of thing. Because I would have already jumped off that building for those guys, because at the end of the day, whether they're right or wrong, they were so wrong on their timing. They didn't respect the board.
Right. And respect the board, because especially in the realm of, because 20 years ago, this could never have happened in lockstep as quick. Okay. This is when I used to, as a trader, get punished because the way my brain works and the way I put this together, these are the things that I would see and wait. And it would take for a week for them to develop. Meanwhile, I got my, you know, I'd lose a lot of money, you know, meaning I never took big losses, but I would be trying to see that I could see this developing. Why isn't anybody else? Now with the electronic trade, it happens instantaneously, and now it's too fast for me. So I'm trying to moderate myself and get it and get the right tempo to it, so to speak.
Yeah.
Let's see something. Okay. So if you wanted to, okay, so I just put up Fed funds, Judd,
Yeah.
February of 22.
Hold on. What is that? ZO,
Hold on. ZQ,
ZQ.
EG, I think. See if that works. I have it up on my board. Hold on.
91. Hold on. That's an active.
ZQEG 22. 2.
Okay, there it is. Okay. I went to a daily, so I don't get the whole
Okay.
roll in there.
Okay. So now, if you look at the board, the book shows 99.92 bid for 1,600 contracts. 1,600, pretty good, right?
Yeah.
1,000 offered at 92.5. That is 8 basis points.
Yeah.
8 basis points. So somebody better tell the 30-year bonds that they are in control. Well, they know that they're in control. The Fed better wake up and go, well, how can it be 8 basis points a year out and the 30-year yields are ripping?
Yeah. And the 30-year, the indices aren't doing anything. And we talked about it this morning. Don't trade them because they're going to be a horrific trade.
Right.
It's all in the names. And
Right.
and the bonds are keeping the spread.
You know, I mean, that's what you're looking at.
Yeah.
Well, so I say to the Fed, good luck to you. Good luck to you. But I'm telling you, if you can get Chris Whalen's piece that he wrote this morning, that not all his stuff is in the public domain. I know that one is, but I'm not sending it out.
Okay.
Do a little bit of work. It's an interesting piece, but I'll tell you one person who must be spinning right now. You want to take a guess who I would think is spinning right now?
Well, Jay Powell or Janet Yellen or
Yeah. How about Lizzie Warren?
Oh,
yeah.
She is sitting there watching this wealth creation for rich people. And if you look at banks, which she harbors such animosity for, and I'm not making the qualitative judge because there's a lot of stuff I agree with her about. But if
Yeah.
you look at the wealth creation, and they just allowed stock buybacks to go with it, by the way, more stock
Yeah.
buybacks. So she's looking at this. She's got to be epileptic. She is, yeah.
apoplectic.
Yeah, thank you.
It's hard to get out.
This has got to be driving her friggin' nuts.
Yeah.
It's a hugely bullish pattern in copper today.
Yeah, you know, and why not?
Everything with it.
Why not?
Yeah, well, we're gonna go. All right, I will do that, Stan.
No, I was looking at the ZQE.
Okay, hold on. Let me put that back. ZQEG, was it 21 or 22? We were looking?
Doesn't matter because it's going to show the curve.
Open forward curve.
Yeah,
right?
that one forward. Oh, I put a lot more months in. Hold on. Right click on the top and go to curve preferences. And just where it says 11, I don't know, put the 12, no, the at the bottom. Just type in 20. Look how it goes down. Look at the,
Yeah, into 22. So it's just pretty much flat lines here until when? Next February.
so I put 63 and no wonder I went out further. But once it gets down there, it just stays down there.
What time,
That's all the contracts going out.
what time is Biden speaking tonight?
Good question. I don't know. Does anyone know that actually?
No.
Because I'll tell you what, watch the 30 years when he speaks, because they're already getting in front of him.
No, I agree.
Right?
O'clock.
Well, I think the trade, the trade is what you said earlier, is the silver gold trade.
Yeah.
I mean, I think the 30-year may be the cleanest one, but I think the silver gold could be, because I just gold's it's a bitch, you know, as you know, it'll frustrate the perma bulls and
Yeah, you know, and if you the posts on my last blog were really good because there was a discussion about
yeah.
Mike Temple starts it out, and it's a very good discussion. And these are people who've been bullish to gold, but there's a frustration level. But forget about being frustrated. You can be frustrated all you want. What difference does it make? That'll make a shit of difference.
Yeah, make money and forget it.
You have to find the opportunity to make money. And if that's what it is, that's what it is.
Yeah.
And
I mean, the truth of it is, if you look back last February, March, if you had gold on, you still got killed. But if you were long gold, short stocks, you made a lot of money. I mean, there's a way of defending yourself and or attacking on a pair trade if necessary.
Cal says 7:15, you guys.
7:15 Eastern time.
Chicago, Eastern. Okay.
So 6:15. Okay, I'm glad I asked. 5:15 my time. Okay, watch what the markets do because they're, you know what, it'll be interesting. But I'll tell you this. Let's see, Andrew. I know I have so much shit in my mailbox. Let's see. Oh, you know, a Mickey Mantle baseball card today. Saw that? A rookie card? Anybody?
No.
No, I
No,
mean,
Huh?
how much you go for?
Come on, give me your best guess.
5 million.
5.4 million.
Ridiculous.
Ain't no problem there.
I'm sure it's some new Bitcoin billionaire buying it.
Hey, I've got a baseball I'll sell that I got from Frank DeVono. He had it hand signed 1935 championship Chicago Cubs. I'll let it go for 25,000.
If I knew who he was, I'd pay you some money for it. Anyway.
It's a whole team.
You're the last of the Cub fans.
Yeah, I gave up my tickets though, because I'm more importantly an economist and I know value. Hold on. I'm looking for this article. Let's see if I can find it. Okay, that's not it. Okay, I got it. Okay, so here you go. I'm going to read this. I'm going to quote you. I'm not sending you the article, I'm quoting, and then I'm checking out.
Fair enough.
Okay. This is from Whalen's piece today. And he's basically telling all the Fed people to shut up because he talks about, all week we heard Robert Kaplan, Patrick Harker talking about, the end of QE. And then, of course, we hear from Richard Clarida, let's see. Clarida yesterday talked about Fed bond purchases will keep pace through the rest of the year, that there will be no end in 2021. Let's see, even after the, I'm giving you the highlights. So then he comes to this, and this makes my case about what we have to watch. He says, just to make investors feel even more confident, the board then unleashed yesterday, the previous day and yesterday, Fed Governor Lael Brainerd, the furthest left Fed governor on the political scale. Now, Chris Whalen is no Fox or, he's a very measured person and a great bank analyst, by the way, in my opinion. He says the former bank regulator from Maryland declared for all to see that the U.S. economy remains far away, quote unquote, from the U.S. central bank's goal of a healthy labor market and stable inflation. As a result, says Governor Brainerd, the Federal Reserve will likely continue its bond buying program for, quote unquote, quite some time. Okay? Then he says this. He says, call us old fashioned, but we think that the former Federal Reserve Board Chairman Alan Greenspan had it right. Basically, the Fed chair should be the only one talking because you get a lot of dissonance, and the really one who really most matters, of course, is the chairman, because the chairman sets the agenda. You can vote against it, but that's okay. Let's see, hold on. But he says something here, which I was chuckling about. Let's see. Come on. Oh, he says, likewise, Governor Brainerd's public musings are not particularly helpful either, since their socialist views, I had to start laughing, are unlikely to win a consensus on the FOMC. Now, I only care about that comment for one reason, because I think she's going to become Fed chair soon, and I think Powell's going. Now, and I'm only bringing this up because before we would see yield curve control, we would actually see her rising that level as the canary in the coal mine, right?
Yeah.
That's all. That's the only reason I bring it up. No other reason. I don't care, because with him saying it, I don't paint her like that at all. That's his words, but it would make her rising. Because don't forget, the New York Times had anointed her as Secretary of Treasury 2 days after, Biden was the winner. And then they wind up picking Yellen. So my thought is, does that leave Brainerd to become the chair of the Fed? And I pay attention to that only because that would unleash the forces that I believe are most relevant, even before you got actual yield curve control, because she's been the greatest proponent of it.
Yeah. So Brainerd appointed, you buy the hell out of gold.
Well, yeah, that would, believe me, that's why I bring it up. And then you'll see some shift. All right, I got to jump. I got to take this, but.
See ya.
Adios.
All right. Thank you. I head off as well. Cheers,
All right,
guys.
here you go.
Take care.
There's this article right there, Andrew.
Thank you, Judd. See you guys.
Okay.